Welcome to Markets Now. I'm Michelle Rook along with Rich Nelson of Allendale. We had a mixed day in grains and hogs higher in the cattle market. So, Rich, let's start off talking about corn. A tough day down technically. We've been removing weather premium, but has it all been warranted?
And I hate to say it, but I do think it has here. Keep in mind here with this weather forecast going through July 15, we are going to pretty much give this market 2 weeks of rains directly ahead of the reproductive phase. And as we all understand, weather at the reproductive phase is the extreme determinant of final yields. So this market has moved its yield premium down in corn. It was at 11% yield cut. Heck, if we drop to a 3 to 7% yield cut, we can still argue there's significant downside left here for this corn market. So we've removed premium, but the question is, even with a little further premium removal, it's still not enough yet to really support these prices here.
But what about the technical action? I mean, we blew through like the 62% retracement. We filled the gap area. We're below all the moving averages. Where do we stop?
And that's the big question here for us. As it stands right now, the chart action is verifying the fundamental discussion going on in these grain markets. Like you mentioned, we filled the downside gap, but actually kept on going without a problem all the way through the day's close. So as it stands right now, this fundamental supply risk removal story is still going on. And right now, markets are in agreement with it. So it looks like right now, bears are in control here.
Even July got hammered into the close today. So what do you think? Is that an indication of what we might see in the stocks report tomorrow?
And that's a really good question, especially with this big question mark with unknown miscellaneous demand, so to speak, lined up for this grain stocks report. Keep in mind, March, April, May corn use is usually about 900 million bushels for that feed residual category. So we can get a lot of surprises. Big question for us is like you mentioned here, does this grain stocks number, or will it verify what people have suggested being perhaps a smaller than expected old crop discussion? So we'll see if that verifies. As it stands right now, we're not quite sure it does here.
Yeah, reciprocally, let's talk about soybeans because July soybeans rallied into the close today. And so does that indicate maybe quarterly stocks are going to be tighter?
It could. One thing about the soybean discussion for this grain stocks report is typically this is not an area where we see surprises. Miscellaneous demand use for soybeans in March, April, May is relatively small, and we don't get big surprises. So at this point in time, I think the soybean story is one where you can argue corn still has a bit of yield premium to remove off this market here. Soybeans actually are a bit more fairly priced, a bit more correctly priced. Discussion for us right now, a 5% yield cut that gets you a no bean price of 12.45. So soybeans have a number when they had a smaller yield premium involved than corn. And as it stands right now, if we drop it down to just a 2.5% yield discussion here, that's 11.80. So you can argue a little bit lower prices, perhaps not as extreme as corn could see in these coming months here.
You bet. And we kind of bounced off 50% retracement levels. So you think we're going to kind of hold those areas, those support areas, or not?
I still think there's a bit of pressure here lined up for both corn and soybeans here. Like I said, though, for soybeans, you can argue there's maybe a little more argument here for perhaps some waves of some light buying here and there lasting for a few days. So I think the soybean story does allow for a little higher pricing than corn occasionally. It really doesn't change the general supply change narrative, which is still in place there for soybeans as well, though.
Any other thoughts about the acreage report in corn and soybeans? Will we see any shifting out of corn, maybe into beans because of the late planting up in the north?
I think so. In terms of the trade estimates, and my estimates are right along with the trade guess, roughly about a 200,000 acre decline out of corn acreage going into soybeans. I don't think that's really a major surprise. And the other issue here is even if you have a 1 million acre change or 2 million acre change, these numbers probably not enough really to change the general story. So I think we'll be watching these numbers closely. I'm not sure if we'll get much price action lasting out of what we see here with USDA's reports.
Yeah. Do you think we trade the report at all or very long just because of what we talked about weather? And then you throw in end of the month, end of the quarter, and all these other things. I mean, this is a lot for the market to digest.
It certainly is. And after this week itself with such extreme declines, could we see some profit taking after USDA gives these reports? Maybe a little relief, so to speak, as we go into the last few hours of trading here tomorrow. That's a clear discussion. I think that's a valid discussion here for us. And keep in mind, we have a holiday lineup here for Tuesday as well next week. you can argue profit taking. I'm not sure if it's going to be a lasting, a significant ride though.
Yeah. It's been a wicked pullback, obviously, in corn and beans, but is wheat gone along for the ride with corn and beans, or is it trading its own fundamentals at this point?
And I still have to, I hate to say it, but I think this wheat market is still taking its cues, at least in the recent days here, from corn and soybeans. So this discussion about wheat prices trading on their own fundamentals, we haven't really seen the wheat market react and stay up based on what we have seen in bullish stories in recent days and recent weeks. So I have to say that wheat is still beholden to corn, soybeans, and world wheat prices rather than U.S. wheat fundamentals.
And specifically Russian prices, which have been undercutting us, and exports really proved out that, we're not competitive and demand is an issue, right?
It certainly is. And let's have a clear discussion on that. Today's weekly export sales for wheat, for this specific wheat, they are 57% below the 5-year average. They were the lowest sales since USDA started this data series back in 1988. So we're about $40 overpriced versus Europe. We're anywhere from $60 to $80, depending on the product, overpriced per ton than Russia. So as far as this goes, we don't have a lot of good news or expectation that this export story is going to change.
You bet. So cattle have had a pretty good up week. We were up again here today. How much of that is just a function of the pullback in corn, Rich?
I do think it's a bit. And keep in mind, another discussion point is we did have some lower cash trades this week, which was valid. We've been dropping for prior 2 weeks. But as far as the corn discussion, especially with feeders, feeders in the sale barns this week, quite strong for 7, 8, and 9 weights. Not so for calves, but for the feeder side, I think this is a solid discussion point. So right now, I think this cattle market is seeing a good deal of short-term support from this lower.
So do you think that the correction that we had is pretty much over for now?
In terms of the cattle side, I do think we're probably on the higher end of pricing right now. Keep in mind, we do have this 3 weeks we had here for the Texas rain impact. That's now over with. We had the slaughter numbers build back up last week and this weekend next. So we're going to go back to slightly normalish supplies in the next few weeks. I do expect a little pressure on cattle. But as far as the feeder side, with this question on corn, I can't really say a feeder is going to have a big wipeout in prices here just yet.
And we'll end on the hog market, which at least the last 3 days have been seeing kind of these forward spreads working. We've got a 2-tiered market. We're going into a hogs and pigs report here in just a bit. You and I aren't going to get to talk about that, but we're all expecting to have some contraction. And so if that's true, then why do we have such a big discount in the back end of this board?
And that's certainly a question here. So, of course, we do always have discounts as we go from tight supplies in summer to large supplies in the winter. So some type of discount is certainly needed. A big question for us, though, is for the current situation is with this hogs and pigs report, a survey taken in the first 2 weeks of June, right when sow slaughter was 10 and 12% over last year. The question is about this end of year supply and certainly the first quarter supply lined up next year. A lot of us will be watching whether these back months do have some firming action compared with this tight summer market.
So, Rich, what numbers are you going to be looking for in the hogs and pigs report to verify that sow liquidation, or are you just saying that we may not see it till next quarter?
As far as the sow liquidation issue, this report is a survey of producers. First 2 weeks of June is when it's taken. It's as of June 1. We actually do have all the sow slaughter information all the way through that period in time. So we're not going to see any new expectation really hit on the breeding herd numbers for this specific report. Where it will show up is in fairing intentions for the next 2 quarters. Our estimates were minus 2.8% for this June-August quarter and minus 2.3% for intentions for that Feb quarter. Maybe those are just not small enough.
Okay. We've had a nice cash rally off of the lows. Is that going to keep going here or not? And has that been all pent up demand here tied to Prop 12 or what?
I do think it is certainly a Prop 12 discussion. We've kind of cleared up some of the concerns we had in prior weeks here, no doubt about with this new information. Cash hogs now on a 21-day run higher, and futures are just slowly moving up their expectation of how long it will last. So futures are suggesting we have another $1.50 last before it peaks out for its traditional summer peak. Of question though is it really going to happen though? So right now, strong rally so far, no sign of it stopping yet on the cash side.
Always a pleasure to visit with you, Rich Nelson with Allendale. That is Markets Now.